So this is the continuation of what I was speaking about yesterday, right? So now this video is gonna be like an all-in proper introduction, right? We're gonna be answering the technicalities. So you might be asking yourself, that means I'm using all the A's and V's that I see on the chart, right? Then the answer to that is no. I'm actually gonna teach you everything, right? Concerning on how to choose the A's and how to view the market using the A's and V's approach, right? So the first thing I'm actually gonna go to is how to determine the entire direction, right? The overall direction. So this is what most people actually call daily bias, right? Me, I just call it directional bias for some weird reason. So I'm actually gonna cover the entire directional bias section before I even continue for you to understand how to choose the A's and V's, right? So I'm doing directional bias currently. So how do we determine directional bias, right? So I only find directional bias on monthly, daily, and weekly, right? So those three time frames actually gave me my daily bias, right? You might argue that on monthly you find monthly bias, on weekly you find weekly bias, but then they all fall under daily bias, right? You want to trade with the daily bias, right? Not the monthly bias, because you might not get a trade in a few months or even in a few weeks, right? So we are trying to have frequent trades as possible, right? To have many opportunities as possible, right? So you don't want to wait weeks for getting a trade. So fine. So since I've told you monthly, weekly, daily, they fall under daily bias, right? So now what do we look for when we determine um directional bias, right? How do we go about with our directional biases? So our directional biases are based on what I call candle ranges, right? What I call candle ranges. But then I'm actually gonna cover what exactly do I mean by candle ranges, right? So remember, we have our A's, we have our V's, right? Same goes for the other time frames. We have our A's and our V's, right? So let me go to daily so you can actually understand what I'm doing right now. So let me make this a bit smaller. I want to make this a bit smaller, so I'll go here, right? I'll actually do a live example of what do I mean by a daily range, right? So a daily range tells you where the market is gonna go, right? Either for the short term or for the long term, right? So you can actually catch any movement, right? So fine. So the final directional range here, let me make it smaller so you can see it, right? I'm looking at this view on the daily here. Uh, this view here on the daily, right? So this view on the daily, what's the use for this view on this daily uh time frame? What's the use for this V here? So this V here actually tells you the directional bias, right? So that means from this point here, from this point here, from the black line right here, where the V ends, actually tells you that the market was actually what? The market was actually bullish, right? So this is the final bullish leg the market made, right? So it's an overextended V in this case. So it's the final bullish leg the market actually made, right? In simple terms, the final bullish movement, right? That the market has made. So from this view, we can actually tell the market was actually going up until the market actually decided to break that structure, right? So when the market breaks that structure, we actually look above the candle that breaks that structure. So let me do a bit of a zoom in here. So we actually go above. Remember, we're on daily. We actually look above the candle that breaks there, right? So when we look above, I'm actually going to put it here. Here's above the candle, right? Let me use a different color. like red, as you know, right? So that's above that candle that broke our final bullish leg, right? Or our final bullish movement, right? So, so fine. From that on, we can actually tell now, uh, here's the above of that candle, and we are looking what is above here. What is above here? What do you see above the red line? I'm actually gonna give you the answer, obviously, it's given that I'm actually the one doing the video and there's no one on this recording, right? So it's a solo recording. So we are actually seeing an order block, right? So that's an order block there, right? So if you want to know what's an order block, you're gonna wait for a video when I actually go deeper and actually explain what are order blocks and fair value gaps and so forth, right? I'll actually go and do one of those videos, right? So for now, the main focus is to understand your A's and V's, right? As you can see, we have an order block here, the final bullish movement before the market actually broke our V there, right? So now we actually have a directional bias from here, right? We actually have a directional bias from here. So if they are breaking a V, which is an overextended V on daily or weekly or monthly, we are actually having a directional bias, right? So now you're actually saying, okay, fine, the market from here to here, it was selling, but from here, it was buying, right? So this overextended V, where's this thingy? So this overextended V was the final buy movement the market has made, right? As you can see, the final buy movement the market has made, right? So it is consistent, right? So it's the final buy movement the market has made, as you can see. So from there on, the market stopped making these buys here, right? These overextended buys, right? These overextended buys. So with these overextended buys, we actually determine direction when they get broken, right? And I'm actually gonna show you how to determine when they get created as well, right? But then for now is them being broken, right, in order to determine the directional bias, right? So for this example, they're getting broken, all right? So fine. I have an order block. Now we've determined a directional bias. Now we are actually saying we are bearish, right? So that means we are looking to sell, right? We are saying the market is going to sell when it reaches our order block here, right? So anything we are doing, we're not trying to attempt to, let's say, even if we're going to be buying here and catching these points here, right? Which I'm actually going to cover as well. If you are catching these points here and buying even from here and so forth, right? And all these points that actually go up, right? So let's say you are seeing buying opportunities here and you can actually catch them, right? So you know very well that you can't hold them for long, right? And you know how long should you hold them, right? And how to target and stuff. So that's another chapter as well. So So even if you catch this one and you think, hey, it's gonna go up and for forever and ever, amen, you're gonna start understanding that no, that's actually a pullback now. Why? Because our last bullish leg was broken, right? So that means we are bearish now. We are bearish. We are actually looking for sales. So sales are gonna be holding for a long term instead of short term, right? So that's what we mean by directional bias. We're saying it's a long-term movement, right? So we already know since sales are a long-term movement, buys are short-term, right? So you already know from there on. So even if you buy from here and get here, you know, my buy is actually ending, right? So you can actually catch the sale. As you can see, the sale is actually entirely bigger than the buys there, right? These buys. So that's directional bias, right? Then from directional bias, let's actually do what I actually call to solidify the directional bias, right? Let's say you missed this entry here, right? As you can see, remember we are focusing on extended V's here, right? Since we're actually determining uh the overall bias, right? The overall directional bias. So we have an overextended V here. So I'm actually gonna mark it. So I'm gonna move lines a bit. So let me take this. this one, right? So as you can see, this is an overextended V as well. So this is another movement where the market was buying, right? But then we know already it's a pullback, right? So when we are in a directional bias saying, oh, the market is selling, and you're still trying to find another entry, or you're still trying to find more conviction that the selling is gonna continue, right? It's gonna continue for a long time, or you want basically more evidence on the chart, right? So the chart is actually gonna keep breaking such structures, right? The V's that are overextended, right? And when the V's that are overextended get broken, remember we're on daily, they're actually gonna give you re-entries, right? Strong re-entries, which I actually call them swing re-entries in this case, right? So these are swing re-entries when they break such things, right? So this is the start of the whole entire directional bias, right? So this is where the huge selling off is actually happening from here. It's happening from here. Then that means anything that comes after is actually a re-entry, right? To catch the entire direction, because we've already determined using this extended V. So now we are using this one, right? So we are actually gonna catch a re-entry here. So they break it. Remember, we are using 3 time frames here. So I'm actually giving you a bit of a secret here. So we're using 3 time frames. We're using daily, weekly, and monthly, right? So that means we are having a break here. As you can see, a break here, right? Of that extended V being broken by which candle? By this candle. So we're gonna be going above here. We're gonna be going above here, right? We know whatever we are wanting is gonna be above here, right? So now I'm giving you a bit of a secret of how to do things now. Oh, wait. All right. All right. Fine. You're having a bit of our own secret there, right? On how to find this turning point. Uh, so the problem now is it's not happening in real time, because if it was happening in real time, I was gonna give you the actual source on how to actually do it, and find that space there, right? And so I'm like, we're gonna cover what fair value gaps are, and so forth. So on daily, instead of having that turning point there as on weekly, obviously it is already printed, right? So on daily, if you were gonna be using daily, you're gonna be choosing here, above here, and when what do you find above here? You actually find this order block, right? Then when you go on a lower time frame, so this actually mixes up with a lower time frame, so 4 hour in this case, right? You're gonna discover that this, yeah, we are not there yet. But then I'm actually gonna tell you, you're gonna discover that this is a trap, right? I'm actually gonna teach you how to find traps. You're gonna discover that this is a trap, right? Then you're gonna see that the only open space that we have for a sell entry is actually this spot here. All right, it's this spot here. Um, and you're actually gonna see that it's actually a bit smaller than what I just threw there, but then so that's another session, right, of where I'm actually gonna show you that, right? So we're having a re-entry here on that fair value gap, so I'm actually gonna throw it as big as it is, right? On that fair value gap there, we have that, right, going on. um we have that going on. I'm actually gonna teach you zone selection and stuff, how to select zones and know exactly where they are going, right? Fine. So this is me just going over and getting rid of me saying other things that don't concern this session. Fine. Then we have our first swing re-entry, right? Swing re-entry. As you can see, the market actually drops after testing that area there, and it drops very hard, right? And it continues. I want you to check the consistencies, right? The market does. It continues to break the overextended V's, right? It continues to break the overextended V's. And remember what I said, when they break the overextended V's, what do they give you? They give you swing re-entries again, right? they give you swing re-entries again. So check what happens. So they break here. What do they give you? When we go above, what do we spot? So here there's no fair value gap, by the way. So this is happening on a on a lower time frame. Here there's no fair value gap. You might argue that there's a fair value gap, but then there's no fair value gap, right? So that's your job to check there. There's no fair value gap there for those who already know what are fair value gaps, right? So that means this is a balanced price range, right? So that means when it's balanced, you are choosing a what? An order block, right? So an order block comes in that form of a week, right? So that's zone selection and stuff, and knowing how to pick based on the range that you are working with, right? So fine. So we get a second swing re-entry here, right? And remember, we said if they continue breaking where they continue breaking our overextended V's, so we have another extended V here. We are gonna be getting what? Swing re-entry. So we have another one here. So it's the consistency for me, right? As they say, social media. So it's the consistency, right, that the market gives, as you can see. So which candle breaks? It's this one, right? When you go above here, what do you spot? This is a fair value gap. You make a fair value gap there, right? When you go above, obviously, you make a fair value gap from where, yeah, like this, right? You make a fair value gap there, right? And you're getting another swing re-entry here, right? You're getting another swing re-entry here, right? And remember, when they continue breaking our overextended V, so as you can see, this is another overextended V. We're actually going to take and put it here. All right. So I want to throw it nicely. So this is another overextended V. So overextended V gets broken. And what do we get? Look, 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 look. When you go above, you get this, right? You get this here. So we have two zones a bit close to each other here, and it's gonna make up for a nice another session when I actually do another video to explain what was happening here. Right, we have an order block there, so I'm just trying to not make them touch each other. We have an order block there, and we have this movement here, right? We have this movement here. So remember, I said these are swing sell re-entries, right? Swing sell the entry. So as you can see, it swings, right? By swing, I just mean price is gonna like go in that direction for a long time, right? As you can imagine, a swing right at the park, so it's going in that direction like deep, right? So where's other V's that they break? So as you can see, there's another one, right? You might even argue this is another one. Even if you mark this, it's still giving you other swing re-entries, right? So I'm gonna do each and everything here. All right, you get another swing re-entry where, look, another swing re-entry where, here. All right, you get another swing re-entry here, as you can see. These are entries, right? And as you know, everything actually runs out of momentum, right? Everything runs out of momentum. So let me choose this one. You can see, right? So the market was actually running out of momentum instead of doing, as you can see. I want you to check the momentum, right, which is injected in the first three entries, right? So as you can see, first entry, look how big the movement is, right? Second entry, look how big the movement is. Third entry, look how big the movement is, right? So fourth entry, now they start giving you a bit of small movement, right? Fourth entry, smaller, all right? So this is actually the fourth and this is the fifth, right? As you can see, the momentum is actually running out, right? As you can see. And this is another view, obviously, that overextends. So we have this break and we're having these other entries here, right? We're having a lot of entries, right? As you can see, even here, we are running out of extended V's to break. So that means now we are moving a bit to our right and finding other entries there, right? As you can see, gets very interesting. You can use whichever you like to find whichever entry you like, as long as it's overextended. You can find whichever entry you like, right? Using the daily, the weekly, and the monthly. You can find anything that you want, right? To get swing entries, right? So that's directional bias, right? That's directional bias. So okay, fine. We want to know, when does the market actually show you that it is done with the selling movement, right? When is it changing the direction, right? How to find when the market is actually changing the direction. So I'm actually gonna do that on the other sessions, right, that I'm gonna be doing. So I just want to make these videos a bit short and actually straight to the point, right? So you're gonna get that one to know when the market is changing direction, right? Because we're actually around that area where the market changes direction. So for now, that's how you determine directional bias, right? And and for just more understanding, whenever the market is below your zone here, you actually know you're looking to try and buy and catch the pullback, right? Which I'm gonna cover on how to catch the pullback, right? So you know, after even after the retest, you know what you're looking for on the lower time frame. You're looking for sell entries, right? You're looking for sell entries. That means now you're looking for sell setups, right? You're looking for sell setups when the market has already retested here. Let's say it was here, gonna be looking for sell setups, even here and so forth, right? Up until it creates another structure. When that structure gets retested, that swing sell re-entry gets retested, you're looking for selling opportunities, right? You're selling with the market, you're selling with the market, right? So that's high probability trading. That's another confluence, right? Mixing it with directional bias, right? Not just the trade direction, but then the entire directional bias, right? That makes your setups more high probability, right? Because you're following the trend, basically, right? So this is what I actually refer as a downtrend, right? So the market is actually just going down, right? So that's a downtrend, right? That's a downtrend. The market is just going down, right? And as you can probably see, the market was going up from this point here and so forth, right? So that's an uptrend. So fine. We're actually gonna cover what makes up an uptrend, how to determine that the market is actually entering an uptrend, right? So, and how to determine that the market is going into a downtrend, right? Which is something I never mentioned. I just covered directional bias without even mentioning swing structure, right? So you can actually understand what do I mean by swing structure and which structures I'm looking at and why those structures, right? So that's going to be on the other video. So for now, this is directional bias, how to determine directional bias. And as you can imagine, for you to find a directional bias to the upside on the daily, weekly, and monthly, you're going to be needing such a structure, which is an overextended A, and that A gets broken, right? In order for you to determine that the market is actually going where it's going up, right? So you can trade along with that direction, right? So I'm actually going to cover that in a bit when I'm actually doing what makes a market go in an uptrend and in a downtrend, so I can explain trends in a deep sense.